Hello, investors and traders. In our last video, we discussed how things are changing in the stock market. Over the past 2 years, the strategy was often to buy on the pullbacks, especially with the Magnificent Seven. However, we explained that we are now entering a distribution phase. This phase indicates that market is topping out. The duration of this topping phase could be 1 month, 6 months, or somewhere in between. We emphasize the idea of a tale of two tapes, certain stocks trending upward and others trending downward. The first stock we'll focus on for a swing trade is GameStop. GameStop shares are likely to remain in the spotlight ahead of the video games retailer's eagerly anticipated earnings report on Tuesday. Recently, the stock has been driven by trading activities influenced by social media influence Roaring Kitty, Keith Gill. His post sent the stock soaring last week. GameStop shares have surged more than 65% since the start of the year through Friday's close, with the most of the gains coming in May and June. This activity followed Gill's post about the retailer for the first time since the pandemic era meme trading frenzy crippled the stock in late 2020 and early 2021. Today, my voice will sound a little bit different. I had some work done on my teeth and I'm recuperating from the procedure, but I really wanted to get this video out before GameStop earnings. Most people will be focusing the first thing on the individual stock, GameStop. I want to look at it in a different way. I want to first look at it as the overall sector and then finding stocks in a very strong overall sector. So before we get started, of course, disclaimer, the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. You must protect your capital by all means. Many times we do long-term trading, we do intermediate-term trading, and we also do swing trading on this channel. GameStop is definitely a swing trade. But before we get into GameStop, let's look at the overall gaming market. The first thing that we do is we try to find a sector that's doing very well. And the e-gaming, gaming, and gambling online sectors have done very well. As from Q4 2023, they are nearly up 75%. So if all the gaming stocks are doing well and surprising and beating and moving up higher, one of the kings of the meme stocks might have an even bigger advantage. So the way I look at it, first, I look at the overall market and I see a tale of two tapes. Then I go to sectors and I'm trying to figure out which sector is performing the best. So even if I pick the wrong individual security inside the sector, if the overall sector is going up, those poorly performing individual stocks will also go up because the overall sector is going up. So what risk are you taking today if GameStop goes down? If the overall gaming sector is still progressing higher, and it looks like it is on an uptrend. And this is kind of what happens in a distribution phase because something needs to hold up the market. And clearly, esports is doing very well recently. A few months prior, we had come out on a post on 5/23/2024. We bought GameStop at 19, and a few days later, we sold it at 30.86 at a 62% gain. Remember, disclaimer, this might not happen again. But a few months ago, we predicted the same thing and made close to 62% money on an individual security. Now we're looking at it a different way. We're looking at that this sector is hot and we want to buy securities inside of this sector. Let's go to current day. Current day, we see from the initial frenzy, people took their profits, got scared, and again, it looks like this stock is on an uptrend. So we are looking to buy on pullbacks on GameStop today before the earnings announcements. Let's say I am right. And for whatever reason, this stock goes up a lot higher the next day. Great. Let's say I am wrong. This stock goes lower. What are we looking at? A strong sector. And the part that is going to go lower will be held up by a strong sector. We had the same philosophy on all earnings announcements for the previous 2 years on the Magnificent Seven. We told you the last 2 months we're not doing it on the Magnificent Seven anymore. So what did I do? For the last 2 years, every time a Magnificent Seven company had earnings report, I bought before. And if it did well, well, we took some of our positions off the table because we knew a pullback was going to come. And if it did not do well, we still believe the Magnificent Seven was in a good sector and it would push up. Obviously, it worked out well for us the last 2 years. This is the same philosophy we have with GameStop today. The only crazy part is GameStop is one of the kings, if not the king, of the meme stocks, which could bring us to either further gains. So what is our official recommendation? We are short-term bullish. We are even intermediate-term bullish. Now, the long-term, we are neutral. We believe that sometime we will have a pullback in this market, which we told you and explained to you in our last video. So let's continue. Are we investing in a bull market? Well, for esports, we are investing in a bull market. Do we use oversold indicators? Earnings are coming out tonight. This stock will move one way or the other. We're just taking a calculated risk that something the public will like about GameStop today. Do we avoid cheap tricks? Yeah. I mean, we are not the person to tell you to buy all the way at the bottom. We want a sweet spot. We always prioritize uptrends, especially in today's market. We're telling you, tale of two tapes. We're buying stocks that are uptrending and selling short stocks that are downtrending. Will we have a stop loss in play? Absolutely. Will we maintain consistency? Well, this same plan that we've been using with earnings, we've done it 2 years on the Magnificent Seven. The only thing now is we're changing idea from the Magnificent Seven to gaming stock and other popular sectors, and specifically GameStop GME. If you just look at the recent movements, something is going on. Someone is buying a huge amount of call options. It could be Roaring Kitty, but we're not just basing this off Roaring Kitty. Some news will come out and it could be Roaring Kitty. And again, remember, disclaimer, do your own research. We've recently had a breakout point back 6 months ago, and this is called continuation buying. But if we are right today, we will take our profits quickly. There's a lot of other gaming stocks that we can buy. Let's go over some of the other things. We are neutral in the overbought, oversold short term. If you look here, we're someplace in the middle while we're filming this video. If you go over medium, long term, and exit swing, again, neutral. So we're basing this again that we're in a hot sector. Somebody bought call options of a lot. This has always been a movement stock. And if you get this movement stock right, you're up a lot of money. And what if you get this movement wrong? Will we not be bailed out by a hot sector? If you look at our CCI indicator, we are again neutral. We are using analytics, data-driven insights, and technical analysis to give us our information. Is this a high-risk move? Absolutely. Is this a calculated play and not using emotion? Absolutely. You will see if you go into strong sectors to buy, you will be rewarded. And even with a pullback on esports, I think for the intermediate term, esports will buck any trade, any trend that will be going on. Thus saying that a stock market pullback will come. Will it come in January, in February, in March? It's going to come. So you know the catchphrase. Study it, analyze it, adapt it. Peace.